Hi everyone, welcome back. So this is the part 2 of chapter 10 sources of data of ACCA F2 Management Accounting, and the chapter's name is sources of data. Before watching this, make sure you watch the part 1, and I have linked the playlist in the description box below. I have also linked the ACCA F2 playlist study text as well as the exam kit playlist and also the other exams. So make sure to check them out. So in the first video, we saw what are the types of data. We saw what primary data is and what secondary data is. And then we also saw what are the problems when we use secondary data, what are the limitations and disadvantages which we can face. And then we saw what discrete and continuous data is. For example, discrete has gaps between it, whereas continuous does not have any sort of gaps or breaks between them. And then we saw what descriptive analysis and inferential analysis is. So a descriptive analysis gives you an idea of the distribution, and so we saw that a descriptive analysis is something like histogram, frequencies tables, etc. Whereas when we talk about inferential analysis, that speaks about testing a hypothesis, for example sampling and stuff. Okay, and then we saw data sources, and then we also saw internal sources of information and how we use them. After that, now we have to start with our external sources of information. We also saw what nominal and ordinal data is, so I'll just quickly take you through that also. We saw that nominal data is like eye color, race, blood type, etc. So nominal data cannot be quantified, whereas ordinal data can be quantified. We come to external sources of information. So in the previous video we discussed what our internal sources of information are, right? So now we'll be seeing what our external sources of information would be. So what do you mean by external? Something which is outside of our organization, right? So we begin with government sources. So government is external. Business contacts, so our customers and our suppliers, again we are gathering information from something which is external to our business. Trade associations and trade journals, financial and business press and other media. So again, news, when we're talking about press, we are more or less talking about news channels and news reports and news journals, internet. So all of these are what comprise of external information, something which is outside of our business. Okay, so now let's see government sources in detail. So there's nothing more to look into it. You know what government sources are. Government produces data every year. Government produces reports every year. For example, the budget. In the first week of April, every time you get the budget every year. So those are the things, those are the periodicals and everything which are published by the government itself. So we as a business can use the publications of the government. So that is now again external information, right? Because that is something which is given by somebody who is external to our business. There is a wealth of published statistical data covering many aspects of the nation's economy. Population. So you know that the ISI, Indian Statistical Association, releases data every year about the population that is there in our about the statistics regarding various things. For example, the population, right? So these are the things. You can just take a look and read this. There's nothing very difficult in that. Okay. Let's read this. Macroeconomics is a branch of economics dealing with the performance, structure, behavior, and decision making of an economy as a whole. So, when we spoke about individual markets, what is individual? Individual always refers to the micro aspect, and now we are going to see the aggregate, which is in a total. So, now that is something which we refer to as macro. Okay. So, in contrast, microeconomics is focused on the actions of individual agents. So, we know that individual things are always linked to microeconomics, and when we talk about the total or the aggregate, we are always referring to macroeconomics. Government produced information will be broadly based and general, dealing with the economy as a whole or particular sectors. So government will always be talking on a macro basis. Obviously, what will I do knowing an individual person's preference when I get to know about an individual person's preference or consumer surplus? I don't think that would be beneficial to me because I own a business. So aggregate is something which is always beneficial. Okay. Now we come to business contacts. What do you mean by business contacts? So if I'm running a business, it is obvious that I will be dealing with producers, I will be dealing with suppliers, I will be dealing with my customers, right? So I will be having dealings with all these kind of people. So I will be having a contact with all these people, right? So they are referred to as my business contacts. An organization may be looking for information more focused on its own position. Its day-to-day business contacts, customers and suppliers can be useful source of this information, and it is often freely available. Customers can provide information like product specification which they require. So I can talk to my customer and I can know their preferences, I can know their interests, and I can know what they really want, right? Their quality requirements. So the customers can also tell me what can be improved in my product. They can also tell me what kind of quality they are looking for, requirements for delivery periods, preference for packaging and distribution methods, feedback, and everything. So, this is the kind of information which I can acquire from my customer base. I don't think there's any confusion in this, it's very basic. Now we have supplier. So, what information can a supplier provide to us? So, a supplier is someone with whom we are dealing in goods, right? So, they are giving us goods and then we are reselling the goods. Quantity discounts and volume rebates which may help the organization. So these are the things like the rebates or the discounts. You remember what we learned about trade discount, bulk discount, right? So those information will always be provided by the supplier, right? So using which you can make certain decisions. Availability of products and services. So now that is again something which is going to be provided by our supplier only. Alternative product and services which may be available. Technical specifications of their product. So whatever product my business is producing, what kind of technology do I require, or how much quantity I need, or what kind of discounts are there in the market. So all of this information will be provided by my suppliers. Okay. Now we come to trade associations and trade journals. So how do trade associations and trade journals in a way help a business in acquiring any sort of information? So most major industry have their own trade association, right? I hope you know what trade association is. We have done it in the BT paper. So what is the role of these organizations? Representing their member firms in legal and other disputes. Providing quality assurance schemes for customers and member organizations. So these are the associations which protect the rights of the customers as well, right? Laying down codes of practice followed by their member associations, publishing trade journals and other information useful for management and development of their business. Very clear, right? Many trade organizations publish their own industry or trade journals which will contain useful news and other informations. In the UK, one of the best known trade journals is The Grocer, aimed at the food and drink retail industry. So, what is The Grocer? It is one of the most famous trade journal which is based in the UK. Okay, now we come to the financial press. Again, this is something which is related to the newspapers, news media, the CNBC channel in India, stuff like that. So, all of that relates to press. When we're talking about press specifically, we refer to the journalism aspects, right? When we're talking about press, we are talking about the media, we are talking about the media industry, we are talking about the television industry, we're talking about the commercials industry and the newspaper industry. Okay. In the UK, the Financial Times, the Guardian, the Times, and the Daily Telegraph, together with some regional newspapers, provide statistics and financial reviews as well as business and economic news. Okay? The FTSE 100 Index. So, the stock market index of the leading 100 leading companies. The FT All Share Index. So, these are the indices which are there, right? Like in India, we have the Nifty 50 index, we have the Bank Nifty index. So, like that, the index which are present in the UK stock market are given below. Such information is now widely available via the electronic media, digital television services on satellite, such as the Bloomberg TV and etc. So these are the things which are the some of the external information. Okay, now we have internet. I don't think I have to explain this. Obviously, we get information using the internet. We're always doing that. That's what you are doing right now also. Through the internet, you're watching a lecture, right? So the World Wide Web is the www. So all this, I think you can read it by yourself. So there are various search engines in the internet using which you can find information. Okay. Now we come to the weakness of the internet. I'm pretty sure that you might be well versed with this topic from before, but let's just quickly go through it. So, you know that anything that is put on the internet, there is no control on it, there is no overall authority on it, nobody is regulating the internet. So, anyone can produce a website, anyone can post anything they would like to. So, there's nothing which is verifying the things which are put up on the net, right? And so, things can be misleading in nature. So people can mislead people on the net and no one will be able to regulate this, right? Accuracy and everything is not there. Now, if I want to find out the actual owner of the particular site, it might be difficult for me. Any data accessed from the net could have been altered. So it could have been changed. Anybody can change, right? So then the data which is used can be inaccurate as well. Much of what is available on the web is of no value, except perhaps the individual who produced it. Websites can change location and leave no forwarding address or disappear altogether. Anyone who relies on certain sites for data could find their source has been gone. So most of the information on the web can be accessed for free, but costs of building and maintaining and upgrading the systems are significant and likely to increase as more networked information becomes available. Now we come to the strengths of the internet. One of the web's strongest assets is the ability to provide current, timely, and localized information. So if I want some information right away, then I get to know with it. I can just straight away go and search it on the net. So if there has been for example, let's say a global crisis or a natural calamity or anything of that sort, so internet immediately provides that information to the people residing in that area, right? So it can be used on various good notes as well. The web's interactive capabilities provide functions not possible through standard print sources. So what do you mean by standard print sources? They are referring to newspapers. Businesses often provide instant messaging or chat now panels which enable customers to query products before ordering online. So if you go on Amazon or if you go on any other retail website, then you can see that there is a chat section over there, or there is a review or a comment section where people can read the reviews of others before placing order of that product. The system of links on a website can bring related materials and information together. You can often find related links on a website that will take you to another site to be able to access more information. The web offers flexibility. Biggest advantage is the wealth of information you can access at the click of the button. So this wealth of information can also be a positive point, it can also be a negative point at the same time. Now we come to benefits and limitations of the external sources. The same way we saw internal sources, now we are going to see that in the external sources. So internal information is produced by the company itself, so the users are aware of any limitations in its quality or reliability. External information is not under the control of the organization. So external information is something which is not under our control, right? So what are the benefits? Wide expanse of external sources of information, easily accessible, more general information is available, can show specific information needs. What are the limitations? Data may not be accurate, finding relevant information can be time consuming. Because there is a lot of information available, it can take a considerable amount of hard work and time in order to find something which is of your interest. Okay, now we come to the next topic, that is the general economic environment. Okay, so the economic environment will have an impact on the costs and revenues of businesses both nationally and internationally. So now you all must have heard of the term globalization, right? What does globalization mean? That countries trade with one another and there is a system of international trade. So there are exports and imports of goods and services within different countries. So what happens in one country will be affecting the other country as well. Obviously, if something is happening in another country, then that is going to affect me also. The recession in US is affecting the Indian economy as well. Why? Because due to globalization, all of the countries are dealing in with each other. So there are supply chains and various other things which are connected with one another. So everything does impact the economy. So how your economic environment is, based on that only everything else is being dependent on. The cost and services of your product and everything is going to be dependent on the way your economy is performing as well. The impact of changing interest rates, exchange rates, inflation, and general economic activity will impact the productivity and profitability of the business. Interest rates affect the cost of borrowing money. If there is a high interest rate, you will not borrow. If there is a low interest rate, you will borrow the money. If interest rates rise, this can impact businesses by increasing the cost of overdrafts and loans they use for financing business activities, and also impact consumers as general living costs will increase. So what do they mean by that mortgage repayment? See, for example, if I'm a consumer, if I'm a customer, okay, I will stop buying goods. I will stop demanding for goods. Like, I will not stop, but I will reduce my demand for goods. Why? Because the interest rates have risen. So I am going to reduce my disposable income spending because I need to pay the interest rates of my house loan. Okay, now we all know what inflation is. I don't think we need to get into the detail of it. So let's just quickly read it. Inflation refers to a rise in the broad price index, representing the overall level for goods and services in the economy. When the general price level rises, each unit of currency will be able to purchase fewer goods and services. So, for example, today with $1, I can purchase, let's say, 10 chocolates. Example. It's just an example. Tomorrow, after a few years, with $1, I can purchase only 2 chocolates. So, with the same amount of currency, I'm able to purchase less chocolates now. So, that is what is known as inflation, that the value of per unit currency decreases. Inflation reflects a reduction in the purchasing power per unit of money. Inflation may discourage investments and savings. So, how does inflation discourage investment and saving? Think about it. If I have, let's say it is 2001. I have 100 rupees in my bank. 100 rupees. Okay. And today with this 100 rupees, I am able to buy 2 houses. Just an example. Okay. But I did not buy. Later on, in 2000, let's say in 2010. Now it is 2010. Now I can buy only one house with the same money. And in 2001, I didn't buy. Instead of buying, I just saved my 100 rupees in the bank. I just saved it and I didn't buy the 2 houses. Today, 10 years later, with the same amount which I saved, I can buy only one house. So now I'm demotivated. I'm really sad that if I would have bought the house 10 years before, then I would have bought 2 houses. Now I can't. So now won't be saving money, right? Because I know that when inflation happens, the value of my currency is going to decrease. Then why will I even save? So that is how it is discouraging savings. So when you're discouraging savings, what do you mean by discouraging investment? Now that I have explained savings, I think you will be able to understand that as well. Moving on to exchange rate. You know what exchange rate is, right? For the exchange rate for which you exchange your currency. For example, $1 today is equal to 82 rupees, 82 point something. So if I want to take $1, I need to give them 82 rupees. So that is the exchange rate. For every currency, you have a particular exchange rate. It can be thought of as the price of the currency. Exchange rates between different countries can affect the level of international trade. Receivable or payable balances in foreign currencies are open to risk if rates change. Prices may need to be revised in response to the exchange rate movements. the general state of economy will impact on the business. I explained this to you, that how our economy is and how our economy is functioning right now will be impacting your business. Is the economy in a boom or bust season? You saw this. We know that this is the boom season, and we know that this is the trough or the bust season. We've done this in the BT paper. Businesses will need to consider the general economic state and how it is forecast to change when forecasting productive and pricing strategies. Okay, now we have the sampling methods. These are the methods of sampling. We'll be doing this in the next video. I don't want to burden you all with a lot of data, since I understand that this is a theoretical chapter. Okay, so we saw sources of data, we saw how are the internal sources, and today in this video we also saw what external data is. In the next video we will be doing what sampling really is and what are the different types of sampling methods. So I hope you understood the chapter so far. Make sure to make your own notes and make sure to read again, and uh, drop your comments in the drop your queries in the comment section below, and I have linked all the playlists in the description box below, so make sure to check them out. Thank you.